Hello my dear friends and welcome to StudyIQ. I am Joy and today in this lecture we will discuss about the tax evasion under the GST regime. First of all, let us look into the current affair. So, in the last year, GST was rolled out. GST is Goods and Services Tax. Two important provisions under GST is one is input tax credit and the second one is exemption threshold. So, with regard to input tax credit means manufacturers can reclaim or claim their tax for the inputs that they have paid, and exemption threshold means the upper cap which is set up by the GST Council, and those manufacturers or those traders or small businesses that fall under the threshold need not register with the GST. And we have recently seen that in the 32nd GST Council meeting the threshold was extended or expanded from 20 lakhs to 40 lakhs. So now the threshold is 40 lakh. That means those businesses or manufacturers or traders who have an annual turnover of less than 40 lakh need not register with the GST. So these two are very important provisions under GST. And the current affair is that there are inflated input tax claims. That means manufacturers or businesses show inflated or increased input tax credit. That means they are claiming more money from the government. And secondly, the exemption threshold are being manipulated. That means they will show their turnover below the threshold so that they need not register with the GST. So ultimately, as a result of both this, what happens is a revenue shortfall under the GST revenue collection. So this both will lead to a shortfall in revenue or a lesser revenue collection for the government from the GST or the Goods and Services Tax. So this is the current affair, and based on this we will discuss this issue in detail. Now let us first understand what is meant by input tax credit. So input tax credit basically means reducing the taxes paid on inputs from the taxes to be paid on output. For example, a manufacturer, he will have various inputs for manufacturing his final produce. So this is the final produce, and in manufacturing this final produce there will be a lot of inputs. So this inputs would be purchased from different suppliers. So input tax credit means reducing the taxes that is paid on the inputs. So this manufacturer would have paid some taxes for the inputs that he have purchased, and for the final product also there will be a tax. So input tax credit means subtracting or reducing the taxes which is paid on the inputs from the taxes paid on the output. Now what is meant by an input tax? Input tax means when a supply of services or goods happens to a taxable person, the GST charge is called an input tax. For example, let us take the manufacturer who produces the final produce. He must have registered with the GST. So he comes under the GST regime, or his business comes under the GST regime. So there will be various small manufacturers who supplies to this manufacturer the inputs. So this suppliers of the small inputs would be charging certain tax. So what happens is that the manufacturer who is producing the final good, he is a taxable person because he is registered under the GST, and the tax that is paid by the manufacturer, that is the manufacturer of the final produce, and that tax is called the input tax. In order to explain it further, let us take an illustration. For example, if the tax to be paid on the final product, let us assume it is 450 rupees. And while making this final product, the producer must have paid taxes to various inputs, and let us assume that the taxes that the producer paid on various inputs accounts to 300 rupees. So in this example, what happens is that final product tax is 450 and input tax is 300. So after the final product is being launched, this producer who produced the final product, he or she can claim the input tax credit of 300 because he or she has already paid it to various inputs, and the final tax the producer will have to pay will be 150 because 450 minus 300 is 150. So this will be the final tax he or she will have to pay. So this is in brief input tax credit. So we have learned in the beginning in the current affair that input tax credit is being inflated. That means the producers, they will show inflated or increased rates of input tax so that in order to claim it back, So here it is 300. If the producer inflates it, say for example shows it at 400, he will get a return of 400. He need to pay only 50 rupees. So this tendency of inflating the input tax credit is very much prevalent in the GST regime, and that is deteriorating revenue under the GST regime, and this is one major reason. That is why it has become very important. Now, what are the benefits of input tax credit? The whole purpose of bringing in this input tax credit system was to minimize tax evasion. And also with this input tax credit, the number of registrations under the GST increases, because if a manufacturer has to claim the input tax returns, he will have to file under the GST or register under the GST. So the number of registrations under GST will increase, and therefore the tax base will increase. So this will lead to more revenue collection for the government under the GST regime. For example, earlier there have been instances where a single business will have more than one PAN card or a PAN or a permanent account number. So this has led to creating more than one GST registration. But now the GST framework help in syncing these registrations and linking it with one permanent account number. So in order to minimize tax evasion and to widen the tax base, these were the objectives of input tax credit. But according to the statistics, government has detected that the GST evasion between the period April to October 2018 was almost around 38,896 crore. So this is an evidence that tax evasions under GST is increasing, even if the input tax credit system was brought in order to minimize the tax evasion and to increase the tax base. Now let us understand a few concerns that is related with the GST regime. The first one is reverse charge provision. So the CGST, that is Central GST Act, has a section 9(4). So section 9(4) of Central GST Act proposed that GST reverse charge provision be paid on reverse charge for purchases made from unregistered persons. So I'll make this concept clear to you. What is reverse charge provision or reverse charge mechanism? It is a mechanism where the recipient of the goods and services liable to pay GST instead of the supplier. Now let us come back to the previous example. We have seen the manufacturer who produces the final product. Let us name him as A. So Mr. A is the person who produces final good. Now there are various suppliers of input. Let us say for example X, Y and Z. These three people are the suppliers of the input to A. So according to reverse charge provision, A who produces the final product, he has to pay the GST, not the suppliers. So X, Y and Z are the suppliers. Now let us assume that Mr. X, he is not registered with GST. Now in our example, Mr. X, who is a supplier to Mr. A, he is not registered under GST. And X makes supplies to A. He is providing some inputs or raw materials to produce the product of A. Now under GST what happens? A, who is the receiver of this input, will have to pay the GST. And now since X is not registered with GST, A cannot claim for input tax return or the input tax credit return from the government. Now what happens? A cannot claim input tax credit return from the government. So ultimately what A will do? A will not purchase further from Mr. X, because if A makes purchases, A will have to pay the tax and there is no provision for claiming the tax returns. So A will purchase only from Y and Z or from any other supplier who is registered under the GST. So with this provision, the small suppliers will be impacted. If they are not registered with GST, what will happen? The larger suppliers or the manufacturers will not purchase the products from them because they cannot claim input tax return. So this provision of reverse charge provision was included in the GST regime in order to increase the tax base. So more and more registrations will take place under the GST. So this was the purpose. But now what is the concern with this reverse charge provision? The implementation of this section has been deferred till September 2019. So this has not yet implemented by the government. So this is one major concern. Now the second concern is with regard to invoicing. So we will see what it is. In order to get exemption from the GST, there is a practice of invoicing under different names. So we have seen about the exemption threshold under GST. So we have seen in the 32nd GST Council meeting, the exemption threshold was increased from 20 lakhs to 40 lakhs. So what happens under exemption threshold? A business which has an annual turnover of less than 40 lakh need not register with the GST. So this is the exemption threshold. And if a firm which has an annual turnover less than the exemption threshold, the firm need not register with GST. So what do firms or manufacturers usually do? In order to make maximum use of the threshold exemption limit, they would invoice at different names. So using different names, they will make different invoices and they will show the maximum threshold limit within the maximum cap. Now the next concern is regarding the HSN code. What is HSN code? HSN refers to Harmonized System of Nomenclature. And this HSN code is used to categorize a product in a business. It is basically adopted all over the world for classifying commodities in various sections. And this is introduced by World Customs Organization. So, such type of questions you can expect in your UPSC preliminary examination. So, you should have an idea what is HSN code. It is Harmonized System of Nomenclature. It is used to classify commodities under various sections, and this was introduced by the World Customs Organization in the year 1988. So now coming back to HSN code and GST. Under the GST, compliance with GST involves providing details of HSN code-wise details of outputs and inputs. That means a manufacturer, when producing the final product, that is the output, and he would be using certain inputs. So the HSN code has to be mandatorily provided, or the details has to be mandatorily provided under the GST regime. And the main purpose, as we have seen, this is to classify goods from all over the world in a systematic and logical manner. So the advantage of HSN code is that this brings in a uniform classification of goods and this will facilitate international trade. But what is the drawback here? The GST tariff, as of now, it has a long list of HSN codes. And this HSN codes have different rates of tax, and this makes this process extremely complex. So the GST regime is not able to make effective utilization of HSN code as well. Now what is the way ahead, or what has to be done? First of all, an ideal tax environment should be created. That means the tax rates are reasonable, the tax rules are simple, the taxpayers are compliant. That means there is more tax compliance, and there is a transparent mechanism. So these will together make or create an ideal tax environment in the country. Now, tax evasion occurs when the taxpayers are very well aware of the loopholes in the tax law. And under the GST regime, there are enough and more penal provisions in order to punish the evaders. So it all depends on the implementation of this penal provisions. This has to be made effective. You can find the PDF of this lecture on my Facebook page, and for any queries regarding your UPSC preparations, you can get in touch with me on my Facebook page, or you can email me at joyce.studyiq@gmail.com. Thank you.